Hi, so welcome everyone to the India Market Review. This is for the week that got over on the 7th, Friday, 7th of October. We are, of course, on the 9th. So we'll do this in the two parts as we normally do. We'll do part one on the global indices and the Indian sector indices, and then later we'll do the part two. So we've had a sort of 2 week break. So this is a good time to catch up and see what's going on. Now the title I've put here is the market confused. Well, more than that, actually, for those of us who've been in the observing the markets, you would have seen that there have been some days where it's fallen a lot, but there have also been some days where it has risen quite well. And just to put the background in perspective, we have spoken about 2 weeks back that overall we expect the market to go down much more than for it to go up. Also, fundamentally, it's not like the market is cheap at all. Not really an attractive place. However, it has been, in a sense, what shall I say, not going down as much as we would have perhaps liked, and that sometimes causes doubt as to what may or may not be going on. In the meantime, of course, we've had the India-Pakistan thing. A week, 9 days back, we had this announcement about the tensions being reduced between India and Pakistan. So that was another, news on which the sort of market rallied a bit. And then we've also seen that while it has rallied, it has also, lost its gains in the next 2-3 days. So it goes up maybe 100 points, 150 points, and then it loses the gains in 30, 40, 50 point steps over the next 3-4 days. And that's what the pattern has been over the last 2 weeks. So essentially, we want to look at the situation right now and then see how it is panning out, if we need to readjust our views, or are we still on track as per the previous IMR, right? Okay, so with that, let's jump into our usual format, and you should be seeing the chart for the S&P 500 on your screen right now. In case there is any issue, do let me know. So today I'm not on my standard double screen setup. So in case you put out a chat, I may not read it because I have minimized the GoToMeeting app. So in case I miss anything you have posted, just shout out on the mic and I'll be able to hear you. All right. So this is the S&P 500 on your screen right now, daily chart. And well, as you can see, it's actually just been going sideways ever since we sort of met last. And you might even say that it has gone into a triangle of sorts. Let me just get that color. Right. Now, all of us who are following the U.S. Election, you know what's been going on, the ups and downs. The first U.S. election, presidential debate, there's one tonight. It'll be at 6:30 a.m. India time tomorrow morning, which I plan to watch. And there's been a lot of ups and downs as far as especially Trump is concerned. And if the S&P continues to behave like this, the moot question, I think, is the U.S. now going to consolidate and go sideways like what we see till the elections get over, which is another 4 to 5 weeks. So that, I think, at the global level is perhaps the biggest factor right now, the biggest uncertainty which needs to be taken care of, and that's obviously going to affect the entire markets. So that's the S&P. Most of the other indices in the US should more or less be the same way. This is the Dow Jones, and though perhaps not really the same type of symmetrical triangle that you saw, but the consolidation is there nevertheless. So that is also going sideways, and that should no surprise there. Coming to Europe, so if you look at DAX now, and just confirming that is 7th, yeah. So the DAX had just massive rallies earlier this week, then has gone sideways. Basically, this 10,500 level is something that it is you know going up and down with, not really decided what it wants to do. My apologies if you're hearing any puppies in the background. There's one litter that was born here a few weeks back. Yeah. All right. So DAX, to some extent, I would say, if I had to take a view, a little bit on the bullish side, strong volumes on the way up above that support, but not able to go above the squeezer stop that we had mentioned over August and September. Right? So really no bullish sign there, but I would be biased on the bullish side. Looking at FTSE, so there was this flash crash on the pound this week, a 6% fall. There's some sort of investigation going on. Nobody seems to know. At least I have no news, or have not read any information about as to the reason for it in the Asian markets. And looking at the FTSE, in a sense, it's back to its life high. If you look at it, this is the entire FTSE from 2008 onwards. And what you can see on the FTSE right there is that it is more or less at its life high. And it's a double top there. And if the FTSE breaks out of that, so something is not very okay with my volume chart here. So just ignore that for now. But on a price basis, clearly we are seeing, I think, a breakout that is pending on the FTSE. And I would say that there's some sort of a flag formation here, and I think the FTSE will most likely rise. So we definitely have higher top, higher bottom pattern on the FTSE. Right? So, right. So that's definitely there, a higher top, higher bottom on the FTSE, and we'll have to just wait and watch. So that could be a bullish trigger, but I think it's going to be mostly, what should I say, limited to the British market or the London market. I don't think you're going to see much more than that. The pound getting devalued very, very significantly, I think, is the big cause of this. And actually, if you're trading the FTSE in pounds, not sure whether you would have made money or not because of the devaluation, right? So that is something to keep in mind. And then looking at the French index, well, went up with the German index and the British index, but very, very much range bound, as you can see over the last several months, almost a year, or yeah. And till it breaks out of that 4,600, really nothing much more to say. And then looking at the Nikkei, right? So there's something, definitely a bug in the market, in the data right now. The Nikkei definitely did not do this. So Nikkei, so ignoring this spike, again Nikkei sideways, dilly-dallying around with that 16,000 level, and nothing much more on that. So overall, I think, to summarize, as far as the US markets are concerned and the European markets are concerned, mostly sideways. I don't think, especially in the US, given the very iffy nature that the election has become, with all the scandals which are coming out and the videos that are coming out, it could swing very strongly this way or that way in terms of, you never know, something on the Hillary side comes out, and I think I would now say that expecting any up move for the next 1 month, I think is very unlikely in the US. There could be up moves in London for local market reasons, but nothing else. And as far as India is concerned, I think there are no global triggers for it to go up for the next 1 month for sure. So until and unless there is some Indian trigger, we would have to wait. And on the Indian side, I think the main thing that has happened is the quarter% RBI cut and some changes in the policy in the way how the rate cuts are managed, calculated, and expected. And there's a lot of talk that there could be up to another 0.5% or 75 basis point cut on the Indian repo rate in the next, probably 6 months to a year, which should definitely be positive for the economy. So locally, I would say there is the rate cut stuff and maybe GST, which is there. But apart from that, there is nothing else. So I would remain putting all this together from the global perspectives, neutral to sideways, and on the Indian perspectives, maybe slightly bullish, but I would just leave it at that. Right? So that's on the technical side. Coming to MSC, right, to deal with that first. So you should be seeing the Nifty at your end, and the Nifty, as you can see, is more or less, in a sense, range bound. But the overall, I think, most important thing to notice is you've got lower tops and lower bottoms. That's I think clearly there, and we are in a downtrend. Right. So there you can see the lower top, lower bottom situation and the downtrend channel. Not a very sharp downtrend, but nevertheless the downtrend channel I think is definitely there as far as the index is concerned. So at the very least, I think what is confirmed now is there is no uptrend, and as a matter of fact, if you go by simple Doe theory stuff, with a second uh, lower top, we can say there's a confirmed downtrend now in the market. Don't forget this super duper down move of 150 points on the Nifty. That was on 29th of September, and the massive volumes that were associated with that. And you can also see in the last 3 days, as the Nifty slipped, the volumes have definitely been on the higher side compared to the up volumes. Looking, I think, on the indicators, more or less the same thing. There's really no strength at all, and there's no sign of even that downtrend getting weaker. So matter of time, I think, before the market goes further down. Right now, looks like it is basically dancing with 8700. It has to make up its mind. It's got support of the 50-day exponential moving average. It's got this trend line support, etc. And plenty of support all the way to 87, 86, and maybe even 85.50. And then we'll have to basically see what is possible. Once it breaks down from that, then I think you might actually see faster down moves. The what could maybe on a sentiment reason hold things back a bit is Diwali. Um, and there's been extremely good sentiment as far as, for example, car buying is concerned. Massive increase in sales. So that what, the 8th or 9th pay commission arrears that were given out. That's going to, that's hit the banks, I think, and that's definitely another lot of money in the system or in the pockets that we need to, keep at the back of our mind. So overall, I would say downtrend, though it may not fall as fast as we would like. So any rise should be used to get out of longs. I think that gets reiterated, and if you can take a positional short on the index, I think that's also something you can look at. Except that you're going to see these sort of you know uh, strong up moves once in a way, event driven. This was because of that announcement about reduction in tensions and some talks going on. Like that, something will keep popping up. You have to therefore keep into account that the volatility will be higher. Your mark to markets should be wider. Your tolerance for bigger moves should be there. Then only go short. All right. So that also, while we are at it, technically to point out, that there are a lot of gaps in the Nifty which have not been filled. Case in point, the biggest gap is here, and to fill that, the market will have to go down to 81.40. Right? So this is a good 500 points down from where it is right now. And you never know. This could take a couple of months also for it to come down. Probably no real hurry for it to break down right now. All right. So that's the Nifty view. Looking at the Nifty Junior, more or less it's the same thing, right? So Nifty, the Nifty Next 50 as it is called right now, there is chart, right? So the mid cap space did of course recover early in the week and seems to maybe be making a flag. But I think in the, like, if you look in the weekly thing, looks like it is all set to go higher. But all right. So what I wanted to point out here on the weekly thing, if you look at the indicators, right? So the candlesticks are now looking pretty strong, but the MACD, I think, I wouldn't say there's nothing like topping out, but it is getting into the extremely mega overbought zone. If you can watch it from say 2008, right? And that's at, while an uptrend is going on, mega overbought at that time is not really a very good or a very healthy sign. So that's definitely something to keep in mind. Though yes, on the mid cap side, there probably still are opportunities to perhaps go long. But I think overall the risk is more than the gains on the long side. But what is reiterated here is that the mid cap space is definitely outperforming the large cap. So if you had to go long, or if you wanted to go long, I think the opportunities or the place to look for them would be on the mid cap side for sure, not on the large cap. CNX mid cap index, or the CNX 500 actually, and that well, what's interesting about it for sure is that it has not only made a new decisive life high after 2015. Not only has it done that, but it really hasn't broken down from that life high. So if you look at the broader market, you're looking at the CNX 500. This is a clear consolidation of about 5 weeks going into the 6th week. And could this maybe still go up? Definitely cannot be ruled out for sure. Right. So that's the broad market, and right. So this is interesting, right? The Nifty seems to be weak. The large cap index, the mid cap is definitely showing strength, and the CNX 500 is not really showing the sort of weakness that you're seeing in the Nifty. So in the Nifty, you're seeing this downtrend, okay, right? This downtrend which is there in the Nifty, which is not there in the Nifty Next 50. It is also not there in the CNX 500. And these are things to strongly keep in mind. Right? Okay, all right. So now to look at sector indices, etc. You should be able to see the Bank Nifty on your screen, and well, what you can see on the Bank Nifty is that clearly that is also downtrend along with the Nifty. So clearly Bank Nifty has an established downtrend. Let's look at PSU banks as we saw in the FA review and also in the technical review earlier. The PSU banks versus the private sector banks were really behaving differently. And what you can see in the PSU bank index is that the downtrend is definitely not there as it is there in the Bank Nifty, which basically means that the private sector space is actually right now performing worse than the public sector space in the bank side. A little bit of a unusual situation, I'm sure you will agree. Usually the private sector banks that are doing well, but if you remember what we discussed on the valuation side, etc., then this actually fits quite well. So this is the CNX PSU banks which are there, and if you wanted to be in the banking space, then most probably the PSU side is the better place. And what's also interesting on this is the fact that this is at a relatively important multi-year support level or support zone, I would say, right? And let me see if I can, something in this, right? So that entire zone is something which is where the PSU bank stuff is. Given the lower interest rates and given the changes in RBI policy, etc., quite possible that maybe the RBI is now leaning towards some sort of what would I say, a more relaxed or a more less strict approach to bank capital structures, etc. And basically, the PSU banks being the ones which are mostly in trouble on that front, they are the ones who could benefit most from this. So PSU banks are not something I would want to short. The Nifty and the Bank Nifty, yes, or actually the Nifty and the private sector banks is what I would want to short. So let's actually put this up. Nifty, Bank Nifty, private. Do not short PSU banks, right? So that's, I think, something which is very clear from this. And then going to the other indices, you have auto, and auto has done really well. Very healthy increase in sales in new models, and they're still to be launched in the next few weeks. We're going to see a lot of that. Having said that, don't forget that auto is definitely on the expensive side. But if now growth is something that catches up significantly, then we could see a lot more, what do you say, upside, technical upside, but I doubt there's a fundamental upside which is there. On the indicators, we are not really seeing negative divergence right now. But if you notice right now, then you do see that on the RSI, if the auto index makes a new high, which it probably could, we are definitely not on a healthy side there as far as the divergence is concerned. There's a clear RSI potential bearish divergence there, and if the BSE auto index goes up, it's not going up with what would I say, RSI being happy about it. Same thing for the stochastic, and I would say the same thing for the MACD, though not so important at this point. So one of the other things about the auto index, if you've been tracking, is while passenger vehicle sales seem to have revived, it is the commercial vehicle sales which have really not picked up. And as a matter of fact, after a pickup a couple of quarters back, they seem to be lagging a little bit again. So that is one thing to keep at the back of your mind. There is then looking at capital goods. Okay. So capital goods has, I think, has really been what should I say, testing our views and our calls, or at least mine. Sorry, had clearly said that this was something taking a lot of support on the long-term moving averages. So the 200, 50, 100, etc. So it's not really broken down. Neither has it really gone up, and clearly it is in a state of consolidation. There is nothing in the indicators or anywhere to suggest that this could rise or that it could fall. So it would be, I think, wait and watch on the capital goods space. And if you had to, I think it would be a short. Really nothing much in terms of heavy industry investment pickup, though there is still a lot of hope about it. Okay. FMCG. So FMCG has gone sideways. Another sector that is really not helping the market go up. Neither is it bearish, but clearly what is there is a downtrend. Right? So there is a downtrend with FMCG. Right, so there is your lower top, lower bottom clearly there on FMCG. And please notice that as far as the MACD is concerned, it's fallen below the zero line right now. So MACD is clearly in the bearish zone. Right, definitely not the case for the auto index, and definitely not the case for Bank Nifty right now, and that's definitely not the case for the PSU banks either. Right, sorry. Right. So I'm just looking at the MACD there here, but the capital goods, or sorry, the FMCG space is definitely there. So I think more weakness on the FMCG side is something that we can definitely expect. So even though, so more or less the monsoons are over, and it's been overall an okay monsoon, and rural consumption, or the rural economy rather, it's probably not going to do very badly. But on the other hand, the monsoon has been not very uniform or very, what would I say, the rain hasn't really spread out as nicely as it would have. A lot of concentration, floods and droughts. On the other hand, Karnataka, 25 districts have been declared drought prone. So that's the situation. So basically saying that the rural economy may not actually be in the best of shape given the erratic monsoon that we had. Healthcare index, so that's also not really able to go up. It's at best consolidation going on right now. lot of news around what I think FDA and things like that. But consolidation, so just let's wait out and see. On the IT side, so that's something that we've been pretty bearish on, right? Looking at the CNX IT here, and in the FA review that we did on the IT space, if you remember, we said it was at a very interesting juncture. I'm not going to spoil the fun by saying what. Do watch that. What has happened technically, however, on the CNX IT is that it has now come to, I think, a very, very important support level. We have been bearish on IT, if you remember. Technically, we were saying that really no sign of it to go up, though the only issue was that it was or is even now perhaps, not perhaps, at a pretty important support zone. And what is likely to happen next? Is it going to hold that support, or is it going to break down? My view, I think, is that it's likely to go down much more than it is likely to go up. So this is one sector where I think, after being a little bit on the not so sure situation, I would now say, given the sort of candlestick pattern you're seeing today, or rather this week, and what you're seeing on the overall charts, I think it could be shorted for maybe another few percentage points lower. Right. Only thing, there is probably a bullish divergence which is setting in as far as the IT space is concerned, and that is something to watch out for. Before I forget, remember that we are now into right. So should not be forgotten. We are into this quarterly results season, and we will most probably see the market go down rather than, it's going to be driven by the quarterly results and whatever happens around that. So do not forget that. Keep that very much in mind, that that is something that could trigger much more moves either way. So before you take any positions, please make sure you've got an event calendar up, and that you are tracking that on any of the stocks that you might be looking to get into. Right. So IT, I would say, is on the bearish side. And then coming to metals. So metals, again, for those of us who are tracking news, you know that the government of India extended the I think import duty or import duty on imported steel that was extended by another 2 months on some 200 more or 200 plus products, steel products from anywhere in the world, mostly basically China. That's where the low cost is, of course, and that's of course good for the domestic industry. And that's been going on for, I think, more than 6 to 8 months right now. There was this bearish divergence that we had marked on the metal side that did sort of correct, or rather the divergence corrected itself with this fall that happened in early September. But then after that, taking support on the 50-day moving average, etc., it has managed to essentially go back up. So this is the metal space could be a place where further up moves are possible. I think we would put this here now. Do not short PSU banks. All right. Also, the the one thing to remember as far as the metal sector is concerned is that valuations wise, it is definitely one of those which is not expensive, and the valuation headroom is definitely there for the metals. Okay. And looking at the realty space, so realty more or less again sideways, really nothing to speak about. The 0.25% interest rate cut for all these cases, metals, realty, and these are infra, CNX infra, that's your infra. So you're discussing that trio sort of together is definitely a good thing for these places. But given the overall, I think, market sentiment, the interest rate cut itself is not enough to drive these stocks up. All right, so there again, low top, low bottom being repeated on the infra side. So infra downtrend, metals doing well, and realty potentially set to do well, though really a little early days. So metals, if we had to say long, okay, metals would be the place, and I am just very cautiously putting out realty also. So right. I think that's it. We've yeah, energy is another place to look at. So energy has been really doing well, and looks like so we don't have energy from too long, so we don't know whether it's hitting life highs right now. Though I would suggest that if you look at power and energy, actually not the same. BSC power versus CNX energy. But if you look at things like OMC, the PSU OMCs, they have actually done extremely well of late, and some of them are probably near or have hit lifetime highs. So it's tough to make a generalized statement about energy. It's too heterogeneous, but yes, it's one place where again you do not want to be short, and perhaps that's one place to be long. Right. Right. So a bit of I would say conundrum here, a bit of a challenge, because not seeing so what's going to drag Nifty down? Really, it's bearish. The bank Nifty, the private sector banks, that's one thing. Perhaps the the infra realty could do that, but really no other sector, and of course IT. So forgot about that. So these are the two places I think which right. So I was just sort of thinking out loud and saying, we didn't not there are a few sectors like metals and realty, which or energy, which could be going up. So I was wondering, what would be contributing to the market going down in some meaningful way. And well, private sector banks have a good weightage, IT has a good weightage, and yeah, let's look at pharma. I think we got that. We look at healthcare. It's pharma. Yeah, CNX Pharma. Right. So CNX Pharma is another place where I think the recovery, if there was, like that you saw here after this fall, is clearly not there. It's a weak bounce, followed by which you've seen it fall, and it's at that place where the 200-day, 100-day moving averages are going to be broken down, and I think on the indicator side also, you're not seeing any strength. You could say it's still consolidating between that 11,300 and 12,000 level mark for 1 to 3 months into the fourth month right now. So that's definitely interesting. Now, if I look at it from a very long-term perspective, let's even go monthly, right? If you go monthly, here's the thing, that pharma has done exceptionally, handsomely from 2012 to 2016. So 4 years, basically into a massive bull market. See the index go from 6,000 to 14,000, doubling, and a sort of correction. And the question is, what now? Clearly, you can see on the monthly side, 3 months, it's gone sideways. The candles are becoming smaller. The shadows are also becoming smaller. Is this a correction which is over, and then the market is going to, go back up? If we look at it on a weekly basis, one could. There was this diamond type pattern which did not break down. If it had broken down here at 11,000, then we have seen even 8,500, but it hasn't, and it's actually gone back up. And so there is some strength, but I think like I said, event season around the corner. And one good point that was made in I think one of the business newspapers is that for the third year now, there's a hope that earnings of the Nifty will grow, and for 2 years it hasn't. And again, we are back on hope. And again, if you were part of the deep FA review, you exactly know what we're talking about. So there are some very real and genuine concerns about EPS growth for the Nifty, and I think for quite a few sectors, not all. And if that doesn't come through, then what happens? So we've been living on hope of reform, of the government kickstarting the economy, etc., or doing some sort of incentives. Right now, GST is mainly the thing to see, wait and watch, but that is April. So the other thing to keep in mind is the advanced budget session. So it's going to be starting in Jan, and the budget is going to be presented 1 month early. And who knows, we might see some very strong policy decisions, but that's still a good 4-5 months away. We're getting ahead of ourselves. So I think overall, I would summarize it this way. Two things, or rather the following issues. One is globally, no positive triggers, right? US probably going sideways for 4 to 6 weeks, and the elections are over. And then we have India monthly results and Diwali. Right? I think these are the basic things to keep in track. And so overall, the view is bearish, and if nothing, and I think the best thing to perhaps, based on what we've seen, is to short is Nifty, the bank, private sector bank stocks, and IT space. Everything else is potentially good longs, and you want to look for any triggers on that side before perhaps getting in. All right, so which brings us to the end of part 1 of today's IMR. I'm going to close this webinar here, and I'll send out a link right now immediately, and then we can get into the part 2 of the IMR. If there are any questions or any inputs that you may have, I'd definitely be happy to get into that. So, is there anything? Looks like nope. All right. Okay. So ending this and sending out another link in 10 seconds. Thank you.